It's a Thursday, so we're joined by Niselow, who's the Chief Investment Officer at Makwe Fund Managers. Good evening, Makwe. It's great to have you again. Great to be talking to you as well. Let's look at the Rand and the JSE. The JSE falling with global markets and a bit of a break in that rally there.
Yeah, definitely an evening to you and to the listeners. And I think markets are tempted to look past the growing economic and political risk. We know the issues Japan, we know France, we know the issues with the shutdown in the US. And we started the session, with the focus squarely on the upcoming, the address by the US Fed chair. But the guy disappointed us in the sense that it didn't touch anything when it comes to monetary policy. And we know that these persistent bets on more interest rate cuts by the Fed, especially after the minutes of the central bank's September meeting released last night, continue to give market participants expectations that there should be something coming end of October. But truth be told, markets need a validation when it comes to this AI frenzy that has powered a record rally when it comes to stocks, and giving elevated valuations. I think it's very important for profits, to start catching up into those rich valuations. And back home here, we've seen that since the commodity prices were mixed and our resources unfortunately dragged us down, but our financials benefiting from the firmer or a stronger rand that lifted our financials as it is. But at some point, as we all understand as market participants, that these things don't go up on a straight line. And us as traders, we usually look for a reason anytime, to have an excuse to take profits off the table. And I think the rand has been benefiting from the fact that we know that interest rates are probably going to come down in the US. That now will increase the interest rate differential between us and the US dollar. And now people will also start flocking into the rand itself because of a better yield. And we know as well that those commodity prices, as much as they were mixed today, but continuing to be at elevated levels, continue to benefit the rand. But it's more a story of what has been happening with the US dollar. That is why we saw the rand continue to stand tall.
If we look then at the gold price as well, you mentioned, of course, that it had fell slightly today, but still sitting above those $4,000 an ounce level at $4,018 currently, 13 cents an ounce. Today I saw people were lining up in Sydney outside a gold exchange to buy gold. And so there's just so much optimism around this resource. And then yesterday, it was interesting to hear from the Anglo Gold former CEO saying that he doesn't believe, he was speaking at the Joburg Indaba, the mining Indaba there, that he doesn't believe that South Africa has truly capitalized on the gold rally. We didn't even see gold mentioned in the ANC's 10-point plan that they released on Monday.
Definitely. And, it's very interesting that to think that at some point we're one of the biggest, producers of gold. But even today, we're not even allowed, as South Africans to own a gold bar. The only way you can own gold, physical gold, that's when you buy Kruger Rands. And yes, you are right. And it's not only gold itself, most of the commodity boom, we didn't capitalize on that. And all people are blaming our policies. But we know that we've seen central bankers have been buying into this whole thing. We know that this gets to be seen as a hedge against any uncertainty, whether it's political or economic. But today, since we had, whether we're going to call it a ceasefire in Gaza or a temporary ceasefire, gold traders continued, to assess that. And also, if you look into the broader geopolitical and economic uncertainty alongside the expectation for U.S. interest rate cuts, that itself sustained that bullish sentiments towards the metal, hence is still holding up the 4,000. But other than the CEO of Anglo Gold, we had people being worried, that, hey, all of a sudden gold, it gets to be seen as more of a safer haven versus the US dollar. So they start to believe that this might not hold, but you got other investment bankers saying, hey, this thing come next year, December, it might reach 4,600. So it's anyone's guess.
Right. And so, of course, keeping a very close eye on that. Then the oil price slipping somewhat today, $65.91 a barrel is the latest price.
Yeah, and because Oil traders are also digesting that Israel-Hamas ceasefire, but I think the other thing, it has been for the second, straight week, we have seen a rise when it comes to U.S. crude inventories. All that tells you is that when inventories are high or they've increased, then it means there was no demand. So the minute we see them going down, then at least it's an indication when it comes to to oil. And at some point, for the longest period during the session, it was trading flat, almost $66 or so a barrel.
23 minutes after 6 on Power 987. You're listening to the Market Pulse. We've been talking to Makwe Masilela, the Chief Investment Officer at Makwe Fund Managers. Just before we head into company news, Kevin in Lotus Gardens has a comment or a question about gold and oil. Good evening, Kevin. Welcome to Power Business.
Good evening, and thank you very much. As a retail trader, I've been looking at the fundamentals of gold, and I can really see that we are really not capitalizing fully on the rising of gold. If we are to be putting fair points, the rand is USD ZAR should be somewhere around 16 if we are to be capitalizing fully on gold. And I think oil is true. Oil is really weighing us down. It hasn't been changing that much. And then if things get to go to the normal, if gold retraces, I think we're going to see ourselves against GDP, British pound, somewhere around 25, and that'll be the worst case scenario.
All right, Makwe, do you just want to respond to Kevin?
Yeah, Kevin has got a point, but Kevin, remember, we are no longer a major exporter when it comes to gold itself, because remember, most of our foreign earnings, they come in the form of the minerals that we sell. But if we were capitalizing on the whole complex of our minerals, then definitely maybe we might be seeing the necessary benefit. So I'm saying don't just put it on gold itself to have that fair value of the rent. In my opinion, it should be more of all the minerals that we are sending out, because as a country, that's how we earn our foreign earnings. And then also remember, we sell those things in gold, in dollars, and then but we cost them in rents. So that's another thing that we have to factor. But I think more or less, generally I do agree with you. I'm just adding other resources, not just only gold.
And maybe to just come in there, and I misspoke earlier, I said it was the Anglo Gold CEO who was speaking yesterday at the Joburg Indaba. It's the Anglo-American CEO. And but he was saying that South Africa hasn't taken advantage of exploration over the last 20 years for gold.
Not really for gold only. I think maybe we also need to remember, these things are not like vegetables. You don't plant, harvest, and plant again. Hence, when you look into any mining company, it's very important to look at, are they paying you dividends? I'm saying that whatever you mine, it gets to some end, let alone whether it's going to be deeper to start mining and it doesn't become profitable. But whatever we mine is not there forever. So if we have taken advantage when we had a real commodity boom, before COVID times, then definitely we could have got something, and maybe from that money we could have easily have created the so-called sovereign wealth fund that people talk too much about, that maybe stuff like that.
Sure.
So, but I'm saying anything that we mine, we all have to remember that you can only mine that thing up until a certain point.
Sure.
It doesn't keep on growing.
Of course. It is an extractive resource. Then let's just go to the JSE news out earlier this week, that Valdene Reddy is appointed as the JSE CEO designate. This is the third woman candidate to head up the JSE in a row.
Yeah, and I think maybe the pleasing thing is that he's an insider. He's been a director of capital markets, so we know that he understands the business. And the JSE, is facing challenging times. Remember, we used to be seen, as the thing that you can be seen as a a step into the continent. But we've seen so many delisting because people are complaining about cost. And another thing that maybe we'll like to see her doing, Back home here, I think less than 6-7%. You get the likes of Kevin who are retail investors. So they should be able to encourage to have more of retail investors to be part of the JSE itself. I think that will also help with liquidity, even though at the same time it might increase volatility. But I think we welcome her, given that she knows what she has to deal with going forward.
Sure, sure. Then let's look at the shipping industry. Well, there may be a ceasefire that's close to being signed, I believe, between Israel and Hamas, but it's still impacting the shipping industry. Aren't convinced that the Houthis will allow for free passage in the Red Sea.
Yeah, and also including the Suez Canal, because remember, because of these issues, there have been some capacity crunch, and that has supported what you call freight rates, and then they've been at elevated levels. And you are right, that raised expectation that the Houthis might halt attacks on commercial shipping the Red Sea. But such attacks, remember, those are the ones that forced people to start coming through our shores, that was since late 2023. But don't be surprised when you see shipping companies waiting for more months, for more of an assurance that attacks will not resume. By the way, this is the very same company that told us that from the 1st of October 2025, they stopped direct shipments to the US from South Africa. So we have to go through European hubs.
Right, right. Let me quickly get your views on Ferrari unveiling their first electric model. The technology has come very far.
Yeah, but it was disappointing because we expected that 40% of their production in 2030, it will be more of the electric vehicles. So they just told us that it's only going to be 20%. And I think one should read that, we had expectations when it comes to the likes of electric vehicles, stuff like that. So we have to start tapering that down. And I think maybe this whole thing, if I'm one of those who've been buying into the hype of AI, I'll start to taper my expectation about the returns that might come out of AI. We're not saying they're not going to be any returns. And Ferrari, they're not the only guys, who've been saying, hey, listen, we thought we'll do a certain percentage. Volvo, at some point as well, they said, no, we don't think we'll be able to produce that much. So I'm saying reality is starting to kick in.
All right. And just a quick sum up from you. What was your highlight this week on the markets, Makwe?
I think it continues to be the issue when it comes to the shutdown. We know that this is the second shutdown. The last one that we had, it was during Trump's first term, but we thought, this will have been resolved by now. But it continues to drag, and I think at some point as market participants, we should start realizing that it might also start, tampering with our expectations when it comes to the interest rate cuts come end of October in the US.
Sure, and of course, it's difficult to get accurate data out of the US federal government at the moment. Thanks so much, Makwe Masilela, Chief Investment Officer at Makwe Fund Managers.